All right, hello everyone. Hey, today I have the pleasure of having Jodie Lukes with Country Financial with me. I've gotten to know Jodie because we're both members of the BNI chapter Portland Business Advantage. I get to communicate with Jodie on a weekly basis and have had the opportunity to learn a lot more about life insurance from her. Weekly, I hear success stories about how life insurance can be a great investment in your future. I've been impressed by all the different options that exist. Life insurance is a lot more complicated than I knew it was. And it's really to your advantage to have a professional like Jodie work with you. So today, I've got one big question for Jodie, because I think this is apropos to what I do. And that is, why should a new homeowner consider getting life insurance? And can it be affordable?
Well, affordable is a big question, right? We never know what that means. Everybody's a little bit different in that. And different life insurance is at a different cost. So I never know what someone's budget is and how much they want. So it all depends on those components. So, but first, let's answer the question about, is it good to have life insurance when you have a mortgage? Well, there's a lot of different reasons why someone would want life insurance when they have a mortgage. And that's if they owe money on that home. When one person is gone, how is the other person going to be able to afford to stay there? And would life insurance fill that gap? The answer to that most of the time is yes. And life insurance, if you buy a term policy, it can be very, very affordable. And it can give you so many options on what you can do with that money. So let's say your mortgage is $400,000. I mean, you could do a $400,000 policy, or you could do $200,000, or you could do $1 million. Everyone is different in what their need is. And when I work with clients, I'm working to determine what the budget is and what the need is and what they feel comfortable with.
Yeah. So again, I think that's a big issue, is like, is it a one income earning household? And again, what happens if that person passes away? What happens, two income earners even? Losing one of those is still a big, big piece. And do you want to have to sell the home? And then we also talked about, what if because I see it fairly often now, what if they're not even married? So now there's essentially two different estates. So how do you manage that? I mean,
well, it's a little bit different of a policy. So what happens when you have two people who aren't married that buy a home together, you can actually have, let's say you have Bob and Sally, just an example. And they're not married and they each want a life policy, right? But Bob actually can be the owner of the policy, but Sally the insured. So he is protecting his interest by paying that premium himself, but it's on Sally's life.
Yep.
And vice versa. So a lot of times in that situation, that's what they would do. And you can actually change that ownership later if both parties agree. Meaning, let's say years later they get married and Sally wants control over this policy that Bob did on her. They can actually change that later on, and then she can actually be the owner of that policy herself, and then she can make changes to it as she wants. But until she's the owner, Bob is the one who's in control of that policy.
Okay. Yeah, I mean, again, like I said, there's a lot of complications to this. And then, again, you hear, you mentioned term. There's also whole life. You hear universal life. And what I've been learning and talking to Jodie is that they're all different kind of financial vehicles, and they all have different options. And so you've got to work within your budget, what you can afford. But if you're in your 20s, 30s, or 40s, life insurance is really affordable. If you wait until you're 60 to get it, it's going to be a different cost. So that new homeowner that's young, getting a policy started that could have future financial value in addition to life insurance value. So talk about that real quick, Jodie. Just as an investment vehicle, taxability of the gain, and can the policy grow in value?
Well, I'll tell you, our regulators hate the word investment with life insurance. That would be my caveat on that. because life insurance is not an investment. So, you know. But what I will tell you, as far as the taxability part, the death benefit on a life policy is tax-free. It is one of the only tax-free benefits that we have left, meaning what that death benefit says is what you're going to get. What I'll tell you is with all of our policies now, whether it's terminal, whether it's a term policy, a whole life policy, or a universal life policy, they all have that terminal death benefit, which means if you are given a year or less to live, you can get up to 80% of that death benefit prior to passing, which that is a game changer for most people and how they spend the last year of their life on this planet. And that again is tax-free. And they can do whatever they want with that money.
Yeah. So again, I think the key here is there's a lot to learn about life insurance. It's probably affordable for most first-time home buyers. So at least ask the questions. So I encourage you, reach out to Jodie with Country Financial. She'll give you options, and that's really her job. You get to make a decision what type of policy you want, how much you can afford, but there's options there you may not be aware of, and they could be really smart as far as securing your financial future. Thanks, Jodie.
I appreciate your time, Greg. Thank you so much.